Hello everyone, hope you are all staying safe. Thank you for joining our weekly market update session. I'm Wael Makarem, Market Analyst, and we will be going over with this session together. So first we're going to talk about the recent developments of the coronavirus and about the new emerging market mover. And after we'll move to the top economic releases this week. And lastly, going over major charts and have your questions answered. So what are the latest news or developments about the coronavirus? We have total confirmed cases has passed 3.5 million, and total recovered cases exceeded 1.1 million. President Donald Trump is a bit optimistic, and he's very confident that there will be a vaccine by the end of this year. France will start easing lockdown measures, and they are considering that the quarantine will not take into consideration those who are in the European Union area, including the United Kingdom. New Zealand, we had a little bit of optimism, especially after they reported 0 new cases. Japan's Prime Minister a while ago, he announced that they will extend the state of emergency towards the end of May. Also, there are some tricks now or applications used now by top countries in order to avoid having a second chance, among them tracing apps. So France and the United Kingdom will be testing these apps this week in order to see how much they are efficient in avoiding having a second wave of the coronavirus. Some positive news last week on Friday, the FDA approved Gilead's drug remdesivir for emergency coronavirus treatment. And yesterday, the CEO, he stated that the remdesivir will be available for patients this week, so hospitalized patients. Also, Japan is looking to approve Avigan. It's also it is considered a drug to be efficient on treating coronavirus patients. However, the clinical trials are still going. So this is the main These are the main developments for the coronavirus, or at least the latest news that we have. The key mover for the past couple of days was the tension or the emerging tensions between China and the United States. Back in since February 2018, the trade tensions between China and the United States were among the key market drivers for a while. They faded when both parties reached the phase 1 trade deal. However, recently these tensions are coming back, not only trade tensions, generic tensions, they are coming back to the main headlines and affecting the market, affecting investors' appetite and risk sentiment, especially that the Trump administration believes that China is after the COVID-19. So here are the latest comments on the matter for the past couple of days. Trump, he stated earlier last week that he's considering tariffs on China as a punishment for the virus outbreak. Yesterday, on Friday, his top economic advisor, Larry Kudlow, also said that China will be held accountable for the COVID-19 outbreak. Yesterday, Secretary of State Mike Pompeo said that there are enormous evidence that the COVID-19 spread was from a lab in Wuhan, in China. So this was also a key statement from Mike Pompeo. And after Trump said that if China doesn't buy any goods, he also threatened further tariffs, and also he said that he will end the trade deal that they reached the phase 1 of it a while ago. So these are the developments on the US-China tensions. So these are the main movers currently that they're affecting the market. We saw a huge reversal in indices. Also, we had a rush towards more safety assets, especially like gold. Gold had a huge rally the past couple of days. So these were caused by the rising tensions between China and the United States. So now we will pinpoint the top economic events for this week, and we have 2 major central banks meeting this week, and also the United States and the United Kingdom will start their first round of trade negotiations. Today we had a quiet start with Eurozone manufacturing PMI falling to 33.4, almost approximate to the preliminary reading that we witnessed last week. So tomorrow we start early with the Reserve Bank of Australia interest rate decision, where the bank is widely expected to keep interest rates unchanged at 0.25%, but also there are expectations or valid talks that the bank will of course express its willingness to act further or ease policy further to support the economy. All central banks around the world are having this commitment to do whatever it takes to support the economy, whether using different or variety of tools that they are available. During the European session, we have the German Constitutional Court will rule on the legality of the European Central Bank quantitative easing program. So this is a key, also a key announcement that we have to follow, especially for those who trade the euro dollar. Then we continue with the UK April Services PMI, where a drop to 12.3 is expected. The preliminary reading was around 12, also around 12.13. So this is for the UK Services PMI. The Eurozone March Producer Price Index expectations of a drop by 2.6% year on year, negative 2.6% reading. The US and Canadian trade balance figures, where we can see a little bit of a widening of the trade deficit in Canada. Maybe this could be due to the drop in oil prices at Canada's top oil producer. Also, the ICM non-manufacturing PMI, where a drop to 44 is estimated. The weekly oil inventories by the American Petroleum Institute, and we end the day with the first quarter jobs report from New Zealand. Also from New Zealand, a drop in employment change by 0.3%, and unemployment rate rise to 4.3% from 4%, which is a little bit acceptable relative to what we are witnessing in different countries around the world. But still, this is for the Q1, so it doesn't take into consideration what happened in April. On Wednesday, during the Asian session, we have the Australian retail sales figures. Moving into the European session, we have the German factory orders, where a contraction of almost 10% is forecasted. Series of services PMI from the European countries, and the generic reading dropped to 11.7, also from 26.4. The UK construction PMI, the Eurozone retail sales, also a fall by 10.5% is expected. ADP non-farm employment change, which is always looked forward by investors in order to have like a small assumption on where the non-farm payrolls will be on Friday. So also expectations of a drop of 20 million jobs for the ADP non-farm employment change. 20 million drop, it's a huge number, almost erasing all the gains, all the job gains since the financial crisis, earned since the financial crisis. So these are the ADP non-farm employment change and the jobs report. They will be among the top followed economic releases this week. Also, we end the day with the crude oil inventories by the US Energy Information Administration. Somewhere reading between 8 to 10 million barrels is expected. We started seeing a little bit of a drop in inventory, especially last week. It dropped to 8.99, where we had 3 consecutive weeks of a build-up by around a minimum of 50 million barrels. However, this drop in inventories means that we could be going to a further demand, which is easing the crude oil inventories. On Thursday, we start early also with the Australian trade balance. Australian trade balance and services PMI from China, where we expected a recovery, to 50 norm. The 50 level is the middle between a contractionary phase and expansionary phase. So there are expectations that the services sector in China recovered to the norm of 50. So a reading of 50.5 is expected. Then ahead of the European trading session, the Bank of England will reveal its monetary policy meeting outcome earlier than usual. So this is from Bank of England. Also expectations of interest rates staying as at 0.1% as previous, and also the Bank of England QE total to also be around 645 billion pounds. So nothing much for the Bank of England. No significant changes expected for the policy by the Bank of England. Also, we continue at the same time. We have the German industrial production, where a contraction of 7.4% is expected, showing the impact of the coronavirus on the German industrial production during March. The weekly jobless claims from the United States, a 3 million reading is expected. A US non-farm productivity and the Canadian IVPMI. On Friday, also earlier, the Reserve Bank of Australia will publish the statement, the monetary policy statement, showing all the expectations for the economic indicators. Also, the German trade balance figures will be out, and the most important report, or the most important release this week, the US jobs report. where investors are waiting to see the actual numbers or the actual impact of the coronavirus on the US labor market. There are expectations that the unemployment rate will soar to 16.1 from a prior reading of 4.4, so a huge rise in unemployment rate, and non-farm payrolls to drop by 21.5 million jobs, 21.5, also a record number for the non-farm payrolls. So these are the numbers to watch for: unemployment rate and non-farm payrolls. Average hourly earnings rise to 3.3% year on year is expected. Also, at the same time, we have the Canadian jobs report, where unemployment change is also expected to drop by 2.75 million jobs, and the unemployment rate to soar to 16% from a prior reading of 7.8. So these are the top economic releases. Also, you have to keep in mind that all the headlines related to tensions between China and the United States will have impact on the market. Also, we have to look for the developments on trade between the United Kingdom and the United States. It could have some small impact, though it is still the first round of talks. Now we're going to move to the MetaTrader 4 platform to talk about to do some analysis on some major currency pairs: gold, oil, and the Dow Jones. So we'll start with the dollar index. This is the weekly chart. A clear reversal last week, erasing all the gains earned during the second and third week in April. So this is a huge reversal signal or sign on the dollar index, also closing almost the lowest since late March. However, the dollar here on the daily chart, we can see a series of negative candles or downside candles, bearish candles. We had a clear rejection from the previous high near 101 level. Also here we found a clear support on Friday near 98.80, which was also the low reached on the 14th of April. So here we're almost trading in a tight range, in a consolidation range between this resistance zone and I'm going to mark them here. So we have this resistance zone and the support zone, and we are trading in between. We have to look out for any breakouts. We could continue to trade here, awaiting some fresh fundamental drivers. For further support, we have to notice the 98.34 level. If we go for a closer look on the hourly chart, a series of drops. Also here, lower lows and lower highs. The downside move, it's very clear, and here we had a little bit of rebound, so we can apply here the Fibonacci retracement to see where we are, almost trading between the 23.6 and 38.2. So you have to be aware of this 99.65 level, and the last resistance, or the upper resistance, could come in at a bigger time frame at 195, near 101 level. So we have to keep in mind any break of this support zone or this resistance zone. Or if you want to look for some targets, if we were able to close below or drop below the support zone, you can go for the Fibonacci extension. So you can draw it here. So maybe the first level could come in. First level could come in here, as we mentioned, at near 98.30, which was the previous support. So we have to keep in mind going for a bigger consolidation zone with the support taken into consideration, and not this one. So this is for the dollar index. If we go for applying some technical indicators, here we can see that the 100 and 200-hour exponential moving averages, the blue and the red line, were playing perfectly with the price. So here we were able to find support a couple of times, and when the price closed below or dropped below, crossed below the 100 and 200-hour exponential moving average, we witnessed a sharp drop, lower lows, lower highs. Also, we found here resistance and again resistance, and here now we're also trading near the 100-hour exponential moving average, trading a little bit higher, aiming maybe towards the 200-hour exponential moving average. So you have to keep in mind this formation. The RSI is a little bit bullish near 65 level. We are approaching the overbought territory of 70, so also a little bit of a positivity from the RSI on the dollar index. So this is for the dollar index. To recap, we have this range trading area. We're trading between two key supports, between support and resistance, 101 and for resistance, and 98.75 for support, and again at 98.30. So these are the levels that you have to look for if you're trading the dollar index. Let's go for the euro. It's completely opposite of the dollar. Pretty good reversal closing at the highest since late March also. So removing all the negativity earned here, but today as market sentiment faded and the demand for the dollar index, for the dollar safety rose, we witnessed a little bit of reversal in the euro dollar or the euro dollar pair. We had a lower low, also a failure to break above, to close above the prior high. So here we have this high, and we try to trade above it, but prices couldn't continue to trade to the upside. So also here we have to take into consideration to look for this bigger consolidation area between 1.1020 and again at 1.7, almost 1.730. So also you have to bear in mind trading inside this consolidation zone somewhere between here. So these could be the supports and resistance for the coming trading days. If we want to look for a higher point, we have to look for 1150, the previous high, and this low 106.30. So these are the key levels if you want to trade the euro dollar. We're trading currently inside the previous week's candle. So we're trading in a tight range. Let's apply some of the the technical indicators. So here also the Bollinger Band is approaching the upper and lower bands are closing into each other, showing that the volatility is becoming less than what we witnessed earlier during the outbreak of the coronavirus. So prices here found some resistance near the 100-day exponential moving average, and here at the 200-day exponential moving average. So keep in mind these levels. If we go for the hourly chart, we are approaching the 100-hour exponential moving average and also the 200-hour. So they were supportive when the market was moving up. Here, the 100 and 200-hour were giving some resistance for the price, and here they gave a little bit of support, and the prices moved higher. So now we're going back lower to the 100-hour exponential moving average after widening a little bit from it, and we saw wider Bollinger Bands due to higher volatility, and now they are opening again, and the RSI is dipping towards the 30 level. So this is for the euro. To recap, we have these two key levels. So if you want to recap for the euro dollar, you have to watch out for the 110 area, and again for the 1780, 1720. So these are the key points to look for. If we were able to break above these two resistances here, we could go for a high of 1150, but we need more catalyst, like a serious catalyst in the market, to have this rally of around 200 points, especially after the weakness and volatility that we witnessed during the past couple of weeks. So this is also for the support near 1.064 and 1.063. So this is for the euro dollar. Let's move for the pound, which is trading also in a tight range. We had here on the weekly chart, we can see a little bit of a consolidation. If we go deeper for the daily chart, we can see here a clear reversal from the previous high, exactly from the previous high, and now we're moving lower. So we have to look for this formation if you want to trade the pound dollar. So maybe you have to combine these two lines to look for supports. Here we have some interim support, and to clear above 126.44 in order to have a move higher. We have some economic indicators coming out from the United Kingdom. Also, we have the Bank of England monetary policy meeting. So keep in mind some to watch out for any move in the pound yen, pound dollar for this week. If we go for the Bollinger Band and the RSI, so here also we can see some support, some resistance here from the moving averages, and here some support, and then the prices moved lower, and here we're trading now near the 200-hour exponential moving average, while RSI is almost at the neutral to bearish mode near the 40 level. So this is for the pound. You have to look out for this bigger formation for a bigger scale. So first you have this support near 22.45 and resistance near 26.45, so almost around 400 points, 400 pips range. Also you can watch out this trend line here for any break or any trade below it for further downside. So this is for the pound dollar. If we go for the dollar yen, we talked about the support zone last week. The market traded below it, and then we had a little bit of a recovery. We can go here. We can see here that the market found reversal exactly from this trend line. You have to focus for this trend line. A break above this trend line could be a little bit positive or supportive for bulls, and also you have to look for a higher resistance near the 108 level. So these are the key levels to watch: 108 for the dollar yen on the top side, and again a break of this trend line. If we use the Fibonacci retracement, it was clear here that the market extended towards the 1236 level last week, and also if we go for this retracement, the market retraced towards the 38.2 or 61.8, depends on how you're drawing this the Fibonacci retracement. So you have to keep in mind the trend line that we talked about and the 108 level in terms of if you're looking for some bullish moves. And for the downside, you have to watch out for any break below the recent lows of 106.40, which could lead us to another drop towards 1514. But first, we have also the 105.60 level. This is for the dollar yen. If we go for the Australian dollar was going for higher highs and higher lows for the past for the past couple of weeks. We had like a good move higher. However, last week when the risk sentiment got checked or risk appetite got checked, we saw the Australian dollar losing all the gains. All the commodity currencies, Australian dollar, Canadian dollar, and New Zealand dollar, they had similar formation or similar move last week. We had series of days moving down, lower candles. Here on the hourly chart, if you want to look for retracements, so we're trading near almost the 23.6% retracement. So this is for the Australian dollar. Further weighing on the risk sentiment could lead to further losses. Maybe we could drop back towards 62.55 level. So it depends on how much there would be risk, since the Australian dollar is very sensitive to risk, or commodity currencies are very sensitive to risk. So this could be the play. Also, you have to look for some positivity on a break above 64.40 level. So this is for the Australian dollar. You have to keep in mind the 62.50, and again for a little bit of positivity, 64.45, and the high of almost 65.60. This is for the Australian dollar. If we go for the Canadian, last week we talked about this head and shoulder pattern. We had a clear move downside, the market moved, and then the market reversed when we had a little bit of a downside on the risk sentiment, and also we saw some of the top officials of the Bank of Canada talking about the probability of implementing negative interest rates. So what you have to look for here, the market reversed exactly from the bottom, so we have this solid support here. So you have to look for this break of the support in order to witness any move to the downside towards 38.50. And also you can keep in mind this trend line, or also this area between almost 142.50 and 143.40 for any resistance. So keep in mind that the price is trading here in a consolidation zone. Any break above this area could lead to a retest to the previous highs near 46.40, and the drop here could lead to a further downside, taking us towards lower area. We can apply the Fibonacci retracement in order to check for targets on the downside. They could be 37.50 and the last one near 136. So this is for the Canadian dollar. Also, you have to keep in mind that we have the jobs report from Canada also on Friday, which could have an impact on the market. Also, the Canadian dollar is sensitive to moves in oil. Oil prices are recovering slightly lately, but still way down to be able to support the Canadian dollar. So this is for the loonie. The New Zealand dollar. Here we're trading in a triangle upside in a channel here. It's almost trading sideways up for the New Zealand dollar. Also, the prices moved down when we had these tensions rising from China and the United States. So prices moved from 61.94 almost to 60.20. So we have to monitor this channel. Also, you have to look for 59.10 in terms of support and 61.70 in terms of resistance. So if you want to trade the New Zealand dollar, you have to look for breakouts from these key levels. If we were able to trade above 61.76, maybe we could go for a higher high near 64.70. But also, we have to witness like a pretty good catalyst in the market or mover in the market in order to trade near these high levels. And on the break of the support near 59.10, we could drop towards 58.20. This is for the New Zealand dollar. Now we move to gold. Last week, gold, we had a little bit of consolidation near the top. We talked about possible formation of maybe a triangle due to this pause here, and the prices dropped towards almost these levels. We're able to bounce from this bottom here, and now we're trading inside this consolidation range, awaiting fresh fundamental drivers. Here we had a move higher, and now we're consolidating inside, awaiting fresh drivers. There are a lot of talks or reports in the market stating that gold could rally towards 1800 due to the excess stimulus in the market. But however, this will have to rely on several factors, especially now with the U.S. and Chinese trade tensions are back to the headlines. So also they could maybe provide some support to gold prices, but also you have to keep in mind that the economy is reopening in the United States and Europe, which is also supportive a little bit for the risk sentiment for traders. So this is for gold. We're trading inside this consolidation zone. You have to look for 1660 in terms of support, that like a big support, 1660 and 1640, and in terms of resistance for 1723, which could coincide with this trend line, and again 1738. So these are the price levels for gold. I repeat, 1670, 1662 and 1640, and in terms of resistance we have 1723 and 1738. So this is for gold. If we go for checking how the moving averages and the Bollinger Band are performing, the moving average, it's clear that we are trading in the consolidation zone, so nothing clear from the moving average here. When the market was moving in a trend, we had a clear move up, but now when we're trading in a consolidation zone, it's normal that the moving averages aren't giving any clear signal, and especially that here they are almost coinciding, so almost the 100 and 200 hour exponential moving average are almost sitting near 1700 levels. So this is for gold. If we go for oil, found exact rebound took place here near the previous low at 110 almost. So we talked last week about a couple of supports with the 10 level and the 625. So the prices were able to rebound from this level. You have to take into consideration that the OPEC plus deal came into play on Friday, so OPEC producers are now cutting their production. Also, the fact that the economy is reopening in different countries around the world, this could also support the demand for oil. So that's why we witnessed this rally higher, and we had almost a 2-week high. So this is for oil. You have to witness to look for the support zone. We are trading currently, or since Friday, we're trading above the last week's highs. So you have to watch for any break below this level. It could take prices back lower, and also here the break of this a clear break of this resistance zone could drive prices higher towards $23 per barrel. So this is for the oil mainly. We have very far swings. These levels are to keep. You have to keep in mind these levels. So 1830 for any break below 1830, maybe we can have some move downside. If we go for the Fibonacci retracement here, it is clear that we're trading near the 23.6 level. So this retracement, if we have to look for some targets, targets for a break above this resistance zone. So prices here corrected to 23.6 or 76.4. So the extension could take us towards the 123.6 level, which comes in at 22.55, 22.60. So they have to watch out for this level in terms of resistance for oil, and in terms of support you have to look out for 18.30. So we're trading this. I'm gonna draw it again. So here we have this almost this box here trading currently. Any move below could trigger a correction or a deeper correction, maybe towards $14 per barrel, and any break above this point could take us higher towards $26 per barrel. So this is for oil. Now we're going to move to Dow Jones, which had a little bit of a clear move to the downside. We're trading inside this channel also. So this is very clear. We're trading sideways up a little bit. We have higher highs. So now we have to focus on this low. If we were able to break below this low, maybe we could go deeper to 222,400. The move lower, the prices moved lower after having after testing the highest level since early March. Here it was a clear reversal from the gap that we had early in March. So a clear reversal for the Dow Jones. If you expect further downside, we have to look for the 2285. If we go for the technical indicators, I'm going to look for, there is no divergence here. So the price is moving steady between this high, the 100-day exponential moving average, and the low of 22,700. So this could be a consolidation zone area awaiting for fresh clarity in the market. However, if we witness more tension between China and the United States, prices could go lower towards 22,500, towards this zone here. So we have to keep in mind 22,500, and on a positive scenario, you have to look for the previous high, 24,200, 250, and the latest high, 24,735. So these are for the Dow Jones. We're trading here in a tight range. A break of 22,500 could lead towards a deeper break lower towards the 20,500 level. So keep in mind that the US and China trade tensions are weighing on the market. So any positivity in this regard could lead to a move higher, and then any further negativity could lead to a move lower. So you have to follow up or to cover the fundamental aspect also while mixing your technical analysis. So in order to have a clearer look where the Dow Jones could be heading. So this is mainly it about the technical, the charts of top majors, and that's it. So if you have any questions on today's webinar, or what's going to happen in the market, or any things that you want to know more about, so kindly write in the questions. I would just like to remind you that all the information or opinion mentioned here in this webinar, they are only for educational purposes, information purposes, and not to be taken as a signal or guidance on what to trade in the market or how to trade in the market. So this is just a confirmation. ICM doesn't provide any direct signal. We are only offering this webinar for educational and information purposes. Okay, so first we have this question: what are the works of EMA 20, 50, 200? Please define, make clear what the works. Okay, so we discussed this on in our webinar on Wednesday, the benefits of moving averages. So it depends on you can take into consideration that these moving averages, you can take them as dynamic support and resistance if you're in a trade, and also any cross from a shorter or a faster period to a higher or a longer period could be taken as a signal to enter the market. Also, you can find on our YouTube channel the webinar under the title of Understanding Moving Averages. We covered everything related to moving averages and the moving average convergence divergence indicator, or MACD. So you can have more information about the uses of moving averages and different types of moving averages. Okay, so we have on Wednesday, we are holding educational webinars. They are for beginners or new traders. So we're trying to support them in having more perspective on analysis and understanding how to analyze the markets from a technical and fundamental perspective. You can find our webinars on the YouTube channel. Also, you can ask for support. We can assign one-to-one session in order to support you during your trading journey. So yes, we can provide one-on-one training for newcomers. So we have a lot of activity in this week. Too much economic indicators to be released. Also, two central banks meetings, and also developments between China and the United States, the tensions between China and the United States, and the coronavirus development, especially the reopening of the economy. So this is a recap for those who joined late. These are the things that you have to look for or to follow up on this week. Any questions, further questions? Okay, so there's someone asking about the euro dollar. Sir, the euro dollar, if we go back to the chart, it is clear that last week we had, we were talking about this inverted head and shoulder for we were talking about this inverted head and shoulder for the euro dollar, complex head and shoulder. So we had complex shoulders, a head complex shoulder, and the market moved clear to the upside, making all the target of 150 pips almost. So now we have to keep to focus on this neckline, which could be very important for any move into the euro dollar. So you have to look for the 890 level. There are a lot of economic indicators to be released from the Eurozone. Also, we have the jobs report from the United States, which are usually key movers in the market. So you have to watch out for these levels and to watch out for these releases for any clarifications on any move in the euro dollar. We're trading on the bigger scale. We're trading in a tight range in a consolidation zone of almost 300 pips between this low and this high. Currently, we are having a little bit of a correction on the move lower. So if we apply the Fibonacci retracement, the prices here held almost near 23.6, and now we're approaching the 38.2, and we have this neckline level, and again we have to look for the 61.8 retracement near 108.40. So this is for the euro dollar. We can't provide a direct signal where the market could be going, but this is a recap on the performance of the euro dollar lately and what you can analyze from this movement. Okay, perfect. So this is it. If you need any further clarifications, you can email us at webinar@icm.com or at support@icm.com for further clarifications and support. You can find the also replay of this webinar on our YouTube channel. So this is all for today, and thank you for joining.